Hi everyone and welcome. Hopefully everyone can hear me. My name is Neil Ryder and we have an amazing panel of kind of desperate knowledge here, so you will learn a lot, which is really nice. Rather than me introducing them and telling you about them, I'm going to let them briefly tell all of you about themselves and why they're so great. Mark.
Hi everyone, my name is Mark Boron. I'm a partner at Fisher Broyles. Prior to joining Fisher Broyles about 5 years ago, I formed the blockchain and smart contracts group at my former firm in early 2017. And since then, I've been practicing advising companies on ICOs and really everything kind of blockchain and crypto related.
Hi, I'm Haley Lennon. I'm Director of Compliance at Bitflyer. We're a global virtual currency exchange doing fiat to crypto. Before Bitflyer, I was at Silvergate Bank and led their fintech initiative and doing the due diligence for banking crypto companies. So excited to talk regulation today.
Hi, I'm Fredo Silva. I'm a partner at Morrison & Forrester, and my practice focuses on startup finance, corporate finance, securities law, and now crypto.
Hi, I'm John Roth. I'm the Chief Compliance Officer for Bittrex, the altcoin exchange based out of Seattle, Washington. Prior to that, I was a criminal federal prosecutor for about 25 years in the Department of Justice, as well as the Department of Homeland Security.
So we've got a very strong background across legal, regulation, compliance, exchanges, ICOs. We're going to cover all of them in a short amount of time. So first, let's talk tokens, because those are exciting, even though Ethereum's trading at 260. So we're going to kick it to Mark first, and he's going to tell us about security tokens, what the potential issues for them, what to be aware of, just, I guess, educate people related to regulation and security tokens, and even outside of regulation. What do people need to know?
Yeah, so I think, now that we've evolved into the world, at least in the US and a little bit internationally now, into the kind of the security token world, we're really focused on kind of the traditional securities laws. I always tell people, ICOs were actually really hard. STOs are kind of hard, but they're kind of just securities offerings, right? So, and you look at your different, offerings. What do you have, right? So you've got, Reg CF as an option if you're looking to raise up to $1 million. You've got Reg A Plus if you want to reach accredited and unaccredited and raise up to $50 million. You've got Reg D, a 506C offering if you want to generally solicit just accredited investors as much as you want. And those are kind of the main exemptions that you're looking at when you're dealing with security tokens. But one of the things that I think needs to be known about security token offerings is, and a lot of people don't recognize it yet, is where the market is at. Because there's a whole legal side of it, but there's also kind of what's the market looking for. And the answer is right now, other than news kind of around T0 and a little bit of lottery.com, had a little bit of success, you really haven't seen any successful security token offerings. So, I always have clients come to me saying, hey, I want to do a security token offering. And I'm always like, hey, that's really exciting. But what is it that's going to make you different from others? And I always point to kind of liquidity being the main issue in the market right now for security token offerings that everybody needs to kind of look at is what kind of liquidity will exist when you actually have an exchange that is actually able to trade security tokens. And until we actually see that, I think the answer is, security token offerings might not heat up in the same way as you saw initial coin offerings. That being said, when that time comes, it'll be very interesting to see whether institutional investors come in or not. So going back to kind of the regulatory side, and then I'll be quiet. The more complicated part about security token offerings is not that initial issuance. The initial issuance, like I said, is pretty straightforward. And if you were doing a security token offering in just the US, it probably wouldn't even be that complicated in the secondary market. The problem is every security token offering pretty much ends up being a global offering. And that ends up being very complicated. Forget the fact that you have to actually comply with laws in every jurisdiction in which you sell. Even looking just at the US, if you were to rely on Reg S, for example, to sell internationally, depending on what category under Reg S you fall in, there's certain transfer restrictions that you need to impose. Well, technically it's just legends, but when you're dealing with a token, putting a legend in a smart contract is not really going to work all that well. You actually have to probably kind of restrict the trading. And then if you're, in the US, a Reg D offering, you're talking about a 12-month transfer restriction. And there's a whole lot of rules that we can get into regarding kind of Rule 144, 4A7, 4A1.5, all these different rules in terms of what you can do in kind of reselling a security.
Okay, so until I dug into this, I didn't realize how many restrictions are related to security tokens that make it challenging. So obviously the legends, the secondary KYC, it is difficult. But what we saw previously was that everyone wanted to be a utility token. Didn't matter what the security token regulations were or securities regulations, because everyone wanted to be a utility token because that was their way out of it. But that's not exactly the easiest way now either. So we have another lawyer who's going to tell us, I guess, Fredo, would you mind kind of educating people on utility tokens? What are the potential issues? What do people need to be aware of? They're going to go that route.
Sure, happy to. So I think one of the first issues about utility tokens is it's not actually clear what that even means and whether it exists as a concept. At least from the SEC's perspective, they've never acknowledged the categories that people like to use with security token, utility token, cryptocurrency. As far as they're concerned, you're either a security or you're not. And even though Director Hinman recently gave a speech that suggested that Ethereum now is not a security, even though it might have been at the time that it was originally offered and sold, they haven't drawn that clear distinction. From their perspective, what we seem to understand is if you are selling in an offering, if you are selling to investors, if you are selling to raise money, you're going to be a security, whether you call yourself a security token or a utility token or a cryptocurrency. It doesn't really matter. So I see sort of the language probably evolving at some point to us really understanding what's a cryptocurrency, what's a utility token that we are treating like a security versus what is tokenized equity or tokenized debt. And I think that's like the real far future of a security token where you're just tokenizing a standard stock or debt instrument. So right now, when we talk about utility token versus security token, I think what we're really saying is, a token that we're going to give up the ghost on and treat like a security and try to comply with versus a token that we're still going to argue shouldn't be covered by the SEC. Whether they'll agree with that position or not, who knows? But I know someone who definitely will say, look, if it's not the SEC, it's going to be me that's going to cover it, and that's FinCEN, the Financial Crimes Enforcement Network. And so a while back in February, they put out this letter that they sent to a senator that said, look, any cryptocurrency that is a convertible virtual currency is going to be covered by the rules of FinCEN. And this kind of freaked people out. But I don't really think that letter said anything that they hadn't already said before, because what they had said before was, if you are a convertible virtual currency, you will be regulated by FinCEN. So what's the difference? Well, it's all the question of what is a convertible virtual currency, right? It's tautological. Like if you are that, then you'll be covered. Well, are you that? And so that is a pretty tough question. It's a facts and circumstances analysis. But traditionally, almost anything that is exchangeable for money and tradable on an exchange is a convertible virtual currency. Unless it happens to be a security, then FinCEN has said, look, since the SEC is covering that, we're just not going to look at it. But that's really based off of unwritten guidance and practice rather than clear rules and safe harbors. And so all they're saying is we're going to keep on applying that. But if you're out there arguing that you're not a security, but that you are a utility or that you are a cryptocurrency, absolutely they're going to cover you, right? And so, for example, I had an investor client that said, hey, I want to support this cannabis stable token. And I'm like, all right, that's going to be regulated by FinCEN. And if you violate the laws of the SEC, as we all saw from Elizabeth Holmes with Theranos, you get a $500,000 fine and you can't serve on the board of a public company for 10 years. Ooh, right? If you violate FinCEN's rules, you go to jail. Right? This is a big difference. And I'm being a little bit facetious, but the point being, these are real issues. And he says, well, why would they be covered by that, right? Okay, well, why do you need a cryptocurrency for a stable coin for marijuana? He's like, well, cash doesn't work because, the government's overlooking it, and it needs to be stable because we can't use Bitcoin because it's too volatile. So I need a stable coin that's pegged to the dollar that we can just use for this industry. And I'm like, so in other words, you want a currency that is virtual and convertible at an easy rate into the dollar to be able to avoid the federal government, and you are telling me that this is not exactly what FinCEN's convertible virtual currency rules are designed to get at? And he's a very smart client, because I've had this conversation with some people where it takes an hour for them to get there. Our 30-minute meeting was over in 5 minutes. We then went and got coffee and talked about something else. But the point being,
was it really coffee though? Never mind. It's the former prosecutor in me coming out, sorry.
So the point being, if you're not regulated by the SEC, you are going to be regulated by FinCEN, and it's quite possible that you could be regulated by both.
So one thing you mentioned there that I find interesting, which is the concept of, and we're just getting there, but we're still a few years away, but we might as well bring it up now. Tokenized debt, right? Tokenized equity. This is a really interesting concept. As an investor, is that something right now I should be very wary of, or I should jump into? Do I need that? Like, why, is that interesting to me to buy equity using a token, or would I just buy a share? What should I do as an investor?
Honestly, as an investor, and I've had investor clients ask me about that. And also companies that have tried that have thought about doing it. It's kind of like, what's the point? Because we already have a system that works with equity and debt. It's not very efficient. It takes a little while, but it's improving. It used to be T+3, now we're at T+2. But there's already enough difficulty in getting the proper infrastructure for having for working with tokens. There's already difficulty in complying with securities rules in terms of like beneficial ownership tracking and voting tracking and proxy issues. So I can see how tokens at some point could solve a lot of the issues that you see with beneficial ownership, but that's a big hurdle to jump over first, and I don't think we're there yet.
The other thing that's worth pointing out is who is it that's tokenizing their equity, right? Because what you're seeing is, and I've done it for clients, is you tokenize the startup. And it's like, is that really the stock that you should be tokenizing? The interesting part's going to be when every public company stock is tokenized. That's when it's going to be interesting. Now, we won't get into Delaware law issues with certificates and stuff like that. Even private companies, public companies probably maybe even easier if there's just DDC. But you've got 12 layers of participants in the public market. Being able to eliminate those, is huge. And there's states like Delaware that have had cases on the major issues, Dole Foods, on issues with the entire kind of nominee process. Being able to eliminate that's going to be huge. So there's definitely massive value in that. It's just a question of, does it make sense for a startup to do that? And does it make sense for startups to do it in the way that they're doing it? I.e., hey, do you want a percentage of my revenue? Says the company who's going to need to go raise 10 or 20 or $30 million, but now has 10% less revenue because they're giving out the revenue. So I think startups need to think long and hard about whether it makes sense.
Okay.
Yeah, agreed.
So tokens, obviously, you can go security token, and there's issues there. There's utility token, there's different issues from a regulatory perspective. But tokens don't matter if there's no liquidity. If there's no place to trade them, you just have a zombie coin, and it's not worth the coin. So let's talk exchanges. So John, talk to us about exchanges. What are you looking at when you see tokens? What are you worried about? What's the world like from your point of view?
Sure, at least from Bitrix's point of view. I mean, we started because we believed in the technology, and like you and like Mark had talked about, you really can't have a token economy without an exchange. We give price discovery and we give distribution that is integral to the success of any sort of blockchain venture, whatever it is. The guys that started it were innovators. They're former Microsoft and Amazon computer IT security engineers. What they look at first is the technology. Is this an interesting application that is different and new from anything they've seen before? So they ask, what does it do and why is it different than any one of the 190 tokens we already list? And the second thing they ask is, who are you? Because obviously the technology is still forming, blockchains break. You need to be able to rely on the team that is putting it together to be able to fix whatever problems that you have. Are they trustworthy? Are they known in the community? Those kinds of things. And we go down to sort of a code level review before we determine whether to list a token. And then the last thing obviously is the compliance review, the legal part. You have 5 lawyers up here talking about that. We are not registered with the SEC, so we do not list securities. We list what we believe are non-securities. And so we'll require an analysis from the coin team, and we will also rely on our own analysis about whether or not it's a security and sort of all the factors that go into that. The fun challenge of interpreting a 1946 Supreme Court case in 2017.
So that's the Howey test, for those of you who don't know, where we're bringing orange groves to today. So it seems like then you are working with what we colloquially know as utility tokens, which makes sense. One of the things Fredo mentioned earlier was the letter to the senator, what's known as the Wyden letter, W-Y-D-E-N, if you want to look it up, which says essentially, looking back to March 13 FinCEN guidance, it could be that, if I have an ICO that's a utility token, I am regulated under FinCEN, which would mean I need state licenses, which take, just for everyone's knowledge, about 2 years to get. What do you think of the Wyden letter? Is that something you're just going to watch and wait for them to come out with something more? Because it's a letter. It's not a,
Right. It was a letter that was signed by a, sort of a deputy assistant secretary type person. So, when FinCEN talks, they talk in fairly clear guidance. They put out guidance with regard to cryptocurrency very early on. I thought it was very clear, very direct. We haven't had that similar guidance. Now, I certainly agree with Alfredo that it's not a stretch to believe that, in fact, they are going to do that, but we haven't seen one clear guidance and we haven't seen any enforcement action with regard to those two things. So, we will see where it goes. It's like everything else in this space. There is a lot of regulatory uncertainty.
Yeah. Our jobs would be much less exciting if it was all black and white, but we live in gray. But you brought up an interesting point, which is, we're waiting for the regulators, which is what we do a lot of, right? Trying to read the tea leaves and see where things are going and seeing what the US is doing, what Canada is doing versus UAE. Talking about US and US regulators, there's the SEC for security tokens, there's FinCEN for maybe utility tokens. Previously, especially in Bitcoin's previous generations, as this kind of started up 4 or 5 years ago, I remember there was obviously a very antagonistic relationship with regulators. Bitcoin didn't think it needed to be regulated. Regulators didn't agree. But I think we've grown a lot since then. But Haley, so you're at an exchange right now, you're at Bitflyer. Talk to us about your relationship with regulators. Is there a relationship? How is it going? Do they hate you? Do they love you? Give us insight from, from your world.
Yeah, so Bitflyer has been operational in Japan since 2014, but I joined about a year ago to help in the US launch, including obtaining money transmitter licenses and the Bit license. So it's been a really interesting journey going from being in Japan, where there's one clear regulatory body, the FSA, to here, where there's a lot of different regulators that are in the space. And so we were the 4th recipient of the New York Bit license. We got it last November. And besides, besides the SEC analysis that John's been talking about, and that's definitely something we do as we start to think of listing new currencies, the New York DFS also views new currencies as a new product or service that needs their approval for each new currency listed. So even if you get past the uncomfortable trying to analyze the Howey test for securities, and you say, okay, it's not a security, we don't need to be a broker-dealer, let's list it. You could do that in all of the other states. We have our money transmitter licenses in, but in New York, there's another layer of analysis. In terms of sort of the actual landscape and relationship with regulators, I've been in the space for almost 4 years, and at my Silvergate Bank days, it was a lot more sort of educating regulators and trying to get them comfortable with the space. I think trying to speak to the legitimacy of the industry and not, pull away the fear factor of it, of this new technology. But I think the regulators are starting to accept that this technology is not going anywhere, and they are being, educating themselves and wanting to be part of the conversation. And we've had some pretty good conversations with, regulators that directly oversee us, like New York DFS, also regulators that are interested in being more active in this space. Like you mentioned, FinCEN was sort of the first to speak up about the difference between a user not being an MSB and an exchange being an MSB. They've come on site to have friendly visits with us, the DEA. So, I think regulators want to be part of the conversation in a friendly, approachable manner.
Okay. That's good to know.
Yeah.
There's obviously challenges there. For those of you who don't know, NYDFS has their own regulations, but an OCC recently came out with their thing that said you can get a national charter, which is a really interesting idea. NYDFS, I think, have they actually sued them yet, or are they going to sue them?
I think they're going to.
They did once, and it was dismissed because there wasn't a case, but now
they're going to sue them, so just background, what that could have meant was that you wouldn't need to get maybe even state licenses, state by state. You could get one license for the entire United States, which would make so much sense. But of course, the states would then lose control, and they are arguing that their constituents would be hurt, and so that they need to maintain these individual licenses, which no company wants. So we will see how that plays out. This is very recent, this OCC charter. No one that I know of has applied for it. I've talked to exchanges all day long. No one I know has actually applied for it. We're all kind of just waiting to see, because again, OCC is going to be sued by the New York DFS, which is crazy when you think about one federal agency suing another, but that's okay.
Yeah, I mean, just to add to that, so Bitflyer is operational in 44 states. Before getting the money transmitter licenses or the New York Bit license, you have to do sort of a state-by-state analysis to understand what states think of virtual currency within their definition of money and which don't, and then get the licenses, and then the maintenance of the license as a whole. I'm trying to build out a team right now just to handle the quarterly reporting and the maintenance of the licenses. So the idea of the OCC National FinTech Charter has its pros and cons. It adds sort of a level of simplicity to the maintenance, but New York DFS on that side has taken time to understand certain implications, including consumer protection and capital requirements, and how you're storing your hot and cold wallets and keys and cybersecurity. So they don't want to lose that sort of oversight that they've gained to try to protect the New York consumer. So it's an interesting sort of battle.
Yeah,
and I think it just highlights the fact that with new technology, the government is always a step behind on this. So we are interpreting money transmission licenses that were written in 1950 and securities rules that involve 1946 case law on brand new technology. So some of the requirements are quite absurd.
Yeah, it will be interesting, so everyone wait and see. So now we're going to kind of combine panelists and combine knowledge share. So Mark and Haley, talk to us about exchanges, talk to us about tokens. What should exchanges be afraid of? Why are exchanges afraid of tokens? Why is every exchange not listing every token? We've heard a little bit about security stuff, but give us what you both think.
Yeah, I think, I think I'll talk about it from a securities law perspective, but the general idea is exchanges, while some take listing fees and make their money off listing fees, a lot of them take it based on, what we'll refer to in the kind of broker-dealer context as like transaction-based compensation. So whenever you have transaction-based compensation in a security, you start getting into the broker-dealer world. And one of the big, kind of evolutions in the space has been, you go back, a year and a half ago, let's leave aside exchanges. That's something that the SEC has specifically pointed out in guidance, I guess. But you had, everyone running around. I guess I won't name names, but every kind of syndicate out there was running around syndicating deals, getting, every advisor was getting a fee based on capital being raised, all on the concept that these tokens weren't securities. Once these tokens now are brought into the security realm, now you start looking at, do you have to be a broker-dealer? And this is why, and I'll let Haley elaborate on this, but this is why you're so sensitive as to whether you're listing a security token or not, because you don't want to be an unregistered broker-dealer, right?
Yeah, it has to be a very deliberate move if you are either being too not cautious enough in what you list, or if you decide to list something that is very likely a securities, that needs to be very deliberate, and it has to be, the dialogue with the SEC needs to be in place, the application, you need to be planning to become a broker-dealer before you do those sort of things. I think from my Silvergate Bank days and Bitflyer days, there's also the reputational risk element of it. in the sense that I think there are plenty of legitimate ICOs. I think there are people that are trying to fit into the way laws are written and comply with those. But there are scams out there. There's people that were looking to make quick money, and just from sort of a business perspective at Silvergate, if we were to have banked a company like that, or at Bitflyer, if we're to list a security like that, and it becomes something where consumers are hurt and money's stolen, or there just hasn't been like the appropriate disclosures and dialogue with the public, that's something that would be very risky for an exchange trying to embrace regulation and be here long term.
Yeah. And one of the things that's worth pointing out, when you're interpreting Howey, for example, you'll have clients that say, hey, can you just talk to the SEC about it? And the answer is I talk to the SEC often about different things. And most of the time the answer is, yeah, we really don't have any idea either. And here's how we might view it. And this isn't, and it's normal. They're not, that's what you'd expect from them is, this is not, some guidance from the SEC. And so, it's very hard to go get a hard and fast kind of ruling from the SEC. The way you do that is to go get what's referred to as a no action letter. Based on kind of my dealings with the SEC, until very recently, they weren't very open to no action letters. They're kind of like, hey, we're going to give some pretty broad guidance in the space. And I think, Director of Corp Fin in his speech kind of mentioned the possibility of no action letters. And I do know a few clients who kind of were exploring it with, and I do know others who are actually seeking them. So kind of moving into the world where we're actually going to get guidance, hopefully from the SEC on specific cases that hopefully are kind of on the edge where we're actually going to get real guidance that we can, interpret a little bit more and then create new gray areas for us. But nonetheless, it'll be helpful.
And to that point, I think attorneys and the SEC, and no one's wanting to put sort of like yes or no in writing. It's so blurry that there's still this sort of like almost like a scale where you're like, this is highly likely to be a security and this is very not likely to be. And I think that, to John's point, that's a reason why companies like ours would want to see like an analysis done by the token itself, and then to do your own and sort of see how the scales have fallen for both analysis and go from there as a business decision. But it's not like clear water.
Yeah, I would say that no law firm that I know of is actually going through and saying, you are not a security, you are a security. No one, and if someone does, be wary. Because no one's doing that.
Yeah, the rumors that you hear of like law firms giving opinions different from memorandums, something that a third party can rely on, not true.
Not happening.
Well, not one that you want anyway, but it's not true.
Yeah, it's usually like a high, medium, low risk, or just sort of like the weighing the factors in one way or another. And so that's,
And then one thing to take away, and I don't know if everyone knows this, is so if I am Bitflyer and I want to list a token that's a security, I have to be a registered broker-dealer. And I don't know of any exchange right now who is a registered broker-dealer. So the reason why you don't see all of these tokens necessarily on all the exchanges is there's a whole lot of work that has to be done. There's additional regulatory compliance on top of the stuff everyone's already doing, and time, and yes. So that's maybe why you're not seeing security tokens traded on exchanges.
That's going to change, though, because there actually already are exchanges out there that are registered fully to transfer securities of companies that aren't publicly traded on NASDAQ or NYSE, right? Yeah. And so you're thinking about, second market shares post, the companies that have been handling secondary transactions in Silicon Valley for, ever since I started practicing, right? And so those companies already have all of the licenses with the SEC. What they're missing, and what you guys do have, is the technological infrastructure to be doing token trading, but missing the licenses to be complying with or doing security tokens, right? On the other hand, you've got these other companies that have the licenses, just don't have the technology. And so I think it's going to be a race to see which of these companies gets there faster to be able to do fully compliant trading of security tokens.
Wow, that was fast.
Any vital thoughts before we open up to questions? Maybe words of wisdom before we.
I was going to ask everyone really quickly, what do you want in the next 2 years and what do you expect? Maybe like 30 seconds to a minute of, tell us what's going to happen in the next 2 years.
I want to see global adoption of security tokens? Because right now I'm very confident that we'll see US adoption of security tokens. I want to see that expand globally, because until then, my battle with clients is always going to be, I want to do a utility token offering, and should you do a security token offering? And seeing that develop globally would be fantastic. And I think what people don't necessarily appreciate is that there's not that many jurisdictions really where you can just go do a crowd sale of something that frankly most of those jurisdictions are going to consider to be a security. So it would be nice to kind of continue to see that ecosystem develop and be able to do global security token offerings.
Nice. Haley?
Yeah, I mean, the clear one is sort of some regulatory clarity would be nice. I think enforcement actions may come, and that may be good in the sense of very clear, like fraudulent type companies. But I also hope that we get more regulatory clarity without needing to like do enforcement actions and prosecute companies that were potentially trying to do it the right way. And then the third that I've been really interested in is sort of the idea of a self-regulatory organization, an SRO. Bitflyer Japan's been part of one in Japan informally since 2014 and formally since this year. And I think I've started to hear more about SROs and coalitions in the US. And I think that at least then there becomes a group of people that are sharing sort of industry standards or helping to discuss aspects with regulators before the regulations come in.
So this is, a very vain hope that may never happen. But as you guys mentioned earlier, so the Rule 144, the 1-year holding period, it's not just that you have to hold for 1 year. It's that if you are an affiliate, which means an officer or major investor of a company, you have to hold for 1 year and still can't trade under 144 unless public information about your company is available, like financial statements, biographical information about your officers, essentially what you would see in a 10K or a proxy. I want to see Rule 144T. I want to see the exchanges work together with the SEC to come up with listing standards and an exemption for trading under one that would be analogous to 144, but that would have information disclosure that's relevant to token holders and token buyers, like how many tokens are outstanding, what's the volume of tokens that are actually being used within the platform, and other metrics that are much more relevant to a token economy than to actual stock ownership.
Yeah, and I'll just add to what Haley said, not only regulatory certainty, but regulatory clarity and simplicity. You can have a very sort of clear set of rules that are very, very difficult to follow. So what we're hopeful is that the US remains competitive in this area as they were competitive in the sort of the internet world, and does not regulate this to an offshore location.
Yeah.
Excellent. Okay, let's give a round of applause for our panel. And I'm happy to take a couple quick questions before we let them go. Any questions?
What is the biggest challenge for an exchange in dealing with Bitcoin or security tokens?
Well, since neither of us lists security tokens, I can only talk about non-security tokens. I mean, our biggest challenge, obviously, are the kinds of AML, KYC challenges that anybody who holds and moves money has on behalf of a third party, right? So, and the other issue, I think, is that this is inherently global. And so the other challenge that we have is, we're trying to use securities laws that are, if you have General Motors stock, you're only listed in one place. If you have Bitcoin or some other kind of a token, you're going to be listed in a bunch of different exchanges that you don't control and that the US government doesn't control.
Yeah, the KYC transaction monitoring side of it, there's a whole new challenge there with there being a fiat side to do transaction monitoring for and the crypto side. So, there's Elliptic, Chainalysis, some vendors that help with that, but that really is more just for Bitcoin. And when you start to list others, the movement on the Bitcoin side is what can often show you if a person's suspicious or maybe doing something that they shouldn't be. So I think that's something that the industry's keeping up with, but that we still have areas to grow in that space.
I would add one thing, which is, in certain ways, Bitcoin is a horrible way to launder money because there's a public record that everyone can see.
I always thought that.
Yeah, in certain ways, though, there's something called a source of funds requirement, which again, there's third-party tools that will map the blockchain and look at wallets and addresses to see where things have come from and are they associated with dark markets or other bad things. Right now it's pretty much exclusively for Bitcoin, although we're starting to see it now more with like ETH and others. But yeah, there's this source of funds requirement that people, including banks, often want. And if you can't show where the money came from, that's a huge risk. Because what if someone's laundering money and you didn't know about it? It is, yeah. In some ways, Bitcoin again is horrible for laundering money. In certain ways, it's actually pretty good. But I think what the exchanges will tell you is they're
50-50 on Bitcoin for money laundering.
Yeah, no, but
That's a good sound
and the
bite.
exchanges are working very hard to make it difficult, right? And in certain ways, we can do a much better job because their tech is newer than a traditional bank.
Let's take one more quick question, and then we'll let you guys go. Whoop,
Yes,
and
the venture capital failure rate's about 55%, the angel failure rate about 65%. I just saw in the Wall Street Journal the token failure rate in the first year is already at 50%. What do you think that the true token failure rate will be if you look out 3 or 4 years?
quick responses. Just give a number. Let's go down
I
the
have
panel.
no answer. I got nothing.
Yeah, I mean,
Sorry. Yeah.
my view on that's simply that it's not comparing apples to apples because one's so much more mature than the other. And so if you remove the fraud part of it, and then you remove the companies that really, there's some 20-year-old who didn't have a team at all, like no chance, like take that out of it. And now look at the ones who actually wanted to do something, and anybody who put any kind of diligence into it would have said, this one I'll actually invest in or consider. I don't know that you'll be, frankly, in my view, I don't think you'll be that far off. It's just the numbers are completely skewed by everything else in the market. So I don't know that it's comparable.
Not apples to apples. Okay, on that note, I'm going to have to let you guys go. Another round of applause for our regulation panel. Thank you.